And it's not new. I mean, the idea is nothing new under the sun applies here in the monetary sphere. We have had many monetary crises in the past, and we're going to go through one now. The difference between what's taking place now, Jake, and what took place in the past is this one is basically worldwide. And, just talking about currency, and the reason I like to use the word currency is really, if you look at Mike Maloney and others, there's a definition of money, which is a store of value, and currency, which doesn't necessarily store value. And I'm going to digress a bit, but I just was looking at some of our older videos for this year, and I did a tribute to the Magambo guru, who Richard Doughty was one of, I think he was the second keynote speaker that we invited to the Silver Summit so many years ago. And what was so interesting about his speech is twofold. One is he had a brilliant mind for humor. He made the whole inflation, depreciation of currencies, and financial conundrum very, very funny, but also with his humor drove the point home. And I had my webmaster, who's still with me all these years, film it. And then we would edit it and put some of it up on our website for our premium members. So during that filming, I really kind of saw the light bulb go over Bruce's head. Now, I had presumed that reading my work and, being with me for, at that time, maybe a year or so, that he really understood, inflation and currency destruction, but he hadn't. But when the Magambo got up there and explained it, he got it. Of course, most of the audience did. But what he talked about was that, from I think it was 1786 to 1901, the price of a loaf of bread cost the same. How does that happen? And then he said, since the founding of the Fed till now, a dollar's worth 2 cents. 2 freaking cents. And he's very animated and much more humorous than I am. But he talked about in a stable monetary system, prices actually go down over time. And when prices go down over time, your standard of living improves. And then he says that's the whole damn point of it. We all want a better standard of living. And with the sound money system, you get there. And in an unsound money system, you basically get the opposite. So I wanted to digress and give you that part of the story of my, personal experience in the sphere. Coming back to the big picture, the currency conundrum gets more play, I think, than it should from the aspect of what it means. And let me explain. Very often from my, members and, conversations, it's all over the internet. I mean, what currency should I be in? I want to be an Australian because it's a resource-backed currency, or a Canadian because it's a resource-backed. There is no resource-backed currency, really. I mean, petrodollar is as close as it can get. And it's not a function of what natural resources are in a particular country that's printing currencies. It's a function of who's printing the most the fastest. I mean, why did the dollar do well against the Zimbabwe dollar? At one time, they were equal. They were equal. And in about 18 months, the $100 trillion bill wasn't even accepted. That bill was printed but never used because the currency had collapsed before it could get into circulation. So are we headed that direction? We're headed that direction. I don't think we're going to end like Zimbabwe where, the currency is absolutely worthless. But we are heading to where something has to be done, and it has to be done fairly soon. Which means a lot of things we can explore together, Jake. But let me just sum it up by saying this. The question of faith is something that, people have a choice in, at least supposedly in our country. You have the right to choose, if you want to be religious or not religious, if you are, what church you go to and all that stuff. And yet you have, humanists or secularists that basically, don't really believe in a God, or they're agnostic or whatever. And I'm okay with that. I'm free market. You can have whatever opinion you want on that topic. But they say they don't have faith. And that is not true. Everyone has faith in the US dollar. Everyone. Worldwide. There's more currency overseas than there is internal. About 65% of all printed physical pieces of paper that say Federal Reserve note at the top are overseas. Why? Because it's trusted and people have faith in it. Once that faith is lost, Jake, it doesn't have to be a majority. Once that faith is lost at a big enough metric, 1%, 2%, 3%, it's over. And the currency crisis will emerge full fold where people don't trust or have faith in the currency. And that's what it's all about.
How far on that path do you think that we are? I was in the gym today, and the whole time the lower thirds, it was news with the sound off, and the whole time the lower thirds was President Biden meets with Fed Chair Jerome Powell to discuss inflation. Biden says inflation, Putin this, whatever. There's always a different lower third. It's about inflation or them explaining what the cause of inflation is. And they at least give the appearance that this is a subject that needs to be addressed. And there's been movement in interest rates. What is your personal feeling as someone who's studied this market and this sleight of hand game by central banks for so long? What do you think's coming next?
More uncertainty and probably more dislocations in the economy. I mean, things are breaking down, and you can attribute them to several things, but a lot of it is attributable to a failing monetary system. And it's going to get worse. Once things start on a downward trajectory, they do not turn around easily. Really, as the analogy, the only way to really turn something around that's failing is for it to hit bottom. Like a stock that's, being sold off, until it bottoms, it's not going to come back up. There may be people that try to catch a falling knife and buy at a certain level or average down or whatever they do, but you're actually better off to stand aside if you can and wait. So I don't think we have a lot of time left. Every fiat has failed. This one is failing. And again, it's confidence. I said faith before. Let me use the word confidence now. It's confidence in the dollar. And so far, to their credit, the Federal Reserve and the political class have provided enough confidence in the US dollar to what Jim Sinclair says, pretend and extend. Everyone pretends that everything is okay and that, if interest rates just get to the right level, the correct monetary policy or the correct fiscal policy or combination thereof, being the lender of last resort to the world, if we just appropriate our fiat fiesta to the right place at the right time, everything is going to work itself out. In fact, I listened a little bit to the WEF, and someone questioned ECB Christine Lagarde about, well, you're going to do this fiscal stimulus in the European Central Bank, and what's the long-term, repercussions of doing this? And she basically said, not her exact words, but she implied, well, it'll work itself out. And the guy just kind of kicked back. So wait a minute, let me ask you again. I mean, is this, how does this resolve? So, well, it'll work. It'll come together. No, it won't. It could for another year or two, I think. I doubt we have 3 years left, Jake. And we don't get there like tomorrow, all the ATMs are closed, although that could happen. That's very remote possibility. Get there where you can't buy steak anymore. The average family can't. It's like, $60 for, a half pound of meat, or you can't get your favorite beverage anymore because they quit making it because the company went out of business. So we're going to see a contraction in the economy, and we're already witnessing that, and it's going to get worse. And people aren't prepared for the reality. And the reality is this: money doesn't solve the problem. That's the real reality. In a currency crisis, it's a crisis. So in some cases, it doesn't matter how much money or currency you have, even money. You could have gold or silver, but if the product that you need or want or must have does not exist, or it's 6 months out because of the supply chain breakdown, or it comes from Taiwan, it's a certain semiconductor that won't be produced for X amount of months for whatever reasons, money doesn't solve the problem. And this is a lesson that mankind hasn't really absorbed, especially the West, in a very, very long time. And this is something that we are all going to face at some level or another. So in other words, you can be a billionaire in gold and still have a lot of problems due to what I see coming.
You've talked before about ATM freezes or bank freezes. So let's say there's a uncontrollable move in the 10-year in the debt markets, it bleeds over to the stock markets, or let's say that there's a mass psychological phenomena around inflation. So far, governments have responded to, for instance, rising gas prices by just printing more money. So let's say this phenomenon, money printing, goes, and there's a psychological phenomenon in the masses. Do you anticipate at a point like that they would freeze funds, freeze bank accounts, do bank bail-ins? Do you think that's something that's on the table? We know that quite a while ago there was emergency banking measures that passed that gave the authorization of this.
Well, that's a really good question. And yes, I mean, I did an interview with Stansberry Research about the bank bail-ins, and it's got like 1.6 million views. So obviously people are concerned about their money and what a bail-in means. And yes, they do have it at their disposal, as you just said. And yes, I do believe it'll be implemented. Whether it'll be broad-based like the entire United States or even globally, I think that's somewhat doubtful, but I do think it'll be implemented. And probably the most likely scenario is a partial implementation. Let me explain. As you know, because we talked about this on one of your previous interviews, but the Argentina example is one of the best. It's like, okay, we're going to freeze your funds in your bank, still your money. And Jake, your checking account still has $20,000 in it, but you're only allowed to withdraw $300 a month. But your money's still there. So that's a partial restriction. And they get away with this crap. So what people don't know is that the money in the bank that they think is their money is only their money until it isn't, because legally they're an unsecured creditor to the bank. And if the bank has a problem, they own that. You don't. And most people, when they hear that, don't believe it. So look it up, do your own research, but you can verify it. That's why I've been such an advocate for many years to have real money outside the banking system. You could have greenbacks, you could have a currency of your choice, Canadian dollars if you're Canada, or Australian dollars if you're in Australia, whatever. But really the ultimate is, gold and silver. But you don't have to go overboard. You don't have to get on the bandwagon that, I'm putting myself on the gold standard and sell all your real estate and all your stocks and buy gold coins. I mean, that misses the point. But you want to have some, especially if you listen to what I said a moment ago. Gold will help, silver will help, and in a lot of instances, you'll probably be very glad you had it. But it isn't the end-all result. It doesn't solve all problems. Money won't solve the problems we're facing in all cases. It'll help in a lot of instances. But if you think money alone, you're not thinking very well.
1.7 million views on a video talking about bank bail-ins. That's maybe an interesting sign that there's more and more people wondering what's next and if something isn't right. What do you think about that spoke to people? And do you think people are starting to take notice to that?
Well, they were. And I know from, my consultation part of the business, which I basically stopped doing. I mean, if someone really wants a consultation, go to the website and address it to my webmaster and he'll forward it to me. I am doing a few here and there, but I can't really just hang out my shingle anymore. I just don't have the time. But people have noted it. And we were getting a lot of people that were calling, basically saying stuff like, David, I've got $1 million in the bank. I've never bought gold before. I'm scared to death. I know you're right about the bail-ins. And what do I do? Who do I buy it from? Where do I store it? And who do I trust? And I had a lot of those, Jake, several months ago. And that stopped happening in the last 6 months or so, maybe even 9 months. I mean, after the Wall Street silver crowd came in 2021, February or thereabouts, a lot of interest, and then it started to kind of just wane, started to just drop off. But I think it will resurface. And one thing I want to get on the public record is anybody, it doesn't have to be a millionaire, anyone that has funds in the bank, I'm not saying take it all out, but if you needed to move out, let's say, let's just use an example. Let's say you've been very conservative, you don't believe in the stock market, so you've just been losing money, year after year, but you're willing to do that because you feel safer buying T-bills. So you've got $50,000 that you've saved over, 8 years in your bank account. And it's U.S. Treasuries. I mean, they're supposed to be the best of the best. But you decided that, you want to hedge your bets because you see what's coming. You saw the bank bail in, and that's your life savings, and you're 38 years old, and, you save that much. So how do you move it? Well, you go to your bank and you say, I want to pull, 15,000 in $100 bills out of my account. They'll laugh at you. Your chances of getting that accomplished are slim and none. You might be able to get it done, but it's going to take a lot of red tape. They're going to want to know why you're withdrawing your money and whether you're going to use it for and all this stuff. But you could very easily get involved with a precious metals dealer and write a check out of your account for $15,000 and put it into real money, which is far superior than having it in the currency anyway. And that's what I think the Fed fears a great deal, all the bankers, is that there's a shift from people writing checks from fiat into money at a rate that upsets the apple cart. And it won't take much. It's not like 10% of the people have to do it, Jake. It's like another 1% of the people have to do it. So I do think that's coming again. And I think there'll be a contingency. There'll be a group of people that know what you and I are talking about. They've intellectualized it. They verified it. They're on board, but they don't take action. And those are the people that hurt me the most from the aspect of, you knew better, but you didn't take the action. Whereas there'll be a lot of people that will have to learn the lesson after the fact. I mean, one of my most favorite expressions are there's people that make things happen. There's people that watch things happen. That would be the second group. And then there's people that wonder what the heck happened. And that will be the vast majority. And the people that are in the vast majority that wonder what happened when the ATMs do close and their bank account is blocked or revalued, they'll get a lesson of monetary history that most people have never, ever thought about.
Speaking of the wonder what the heck happened, on the theme of money war on our currency, one of the side effects of it is it becomes class warfare, in that the money printing, of course, enriches the people closest to it. But today, data came out that U.S. savings rate is officially the lowest since 2008. I saw an article the other day talking about the Fed saying that one of the issues is nominal annual income is actually too high. And you're seeing this destruction of really ultimately will be billions, but if we talk about just in America, millions of people. U.S. savings rate officially at the lowest since 2008. What's your thoughts on that, and what's next?
Well, it's very obvious to me that it would take place because the cost of real goods and services, the two most important being food and energy, keep escalating in price dramatically. And so people can't put those off. That isn't discretionary spending, that's required spending. And so, of course, they're going to have the ability to save less because they have to spend more to survive. And that trend will continue. And a lot of people already are using whatever credit availability they have to borrow for basic necessities. And that trend will continue as well. So we're looking at a very tough time, not only in the United States, but globally. And just to go a step further, if you go into a poor country, like let's say you'll take Indonesia is an example. And there's, like anywhere, there's very wealthy, there's very poor, there's in between. But the average out there is spending like 40% on their food budget. Well, that means 60% goes to utilities and rent, and assuming no entertainment or anything else. So if food doubles and it goes from 40% to 80%, how do they heat or cool their home, or how do they pay their rent? They don't. And food prices are going to continue up for a variety of reasons. And that's very, very heartbreaking to most of the world. It certainly hurts the Americans. I'm not saying it won't, but on a percentage basis, it's more devastating to the less developed world than it is to what we used to call the free countries, the free world, which doesn't exist anymore, by the way, but we both know that.
Now, while we got you here, I've got to ask you one question to wrap up about you're known for silver. Billionaire Eric Sprott considers you one of the top 3 silver analysts in the world. What does it take to get a movement in silver? Is it once mass uncertainty hits? Is it movement from a next leg of fear, whether it's the debt markets, whether it's inflation, whether it's the Fed reversing course on their move of interest rate increase? What's your thoughts?
And my thoughts have changed somewhat. I think my thoughts are we need more truth in the silver market. What does that mean? That means that there's been too much falsification of the amount of silver that's been bought in the physical realm. If you go back into the past and you look at all of these lawsuits about silver manipulation, and even though the lawsuits that have been won normally have the word manipulation in it, they'll have the word spoofing, or there's other terms that are used, but basically it's a manipulation. And the courts have determined that that did take place, and banks have paid fines. But my main point is that one of the early ones was Morgan Stanley. Morgan Stanley got caught by one of their more significant individual investors for charging for not only the silver, that physical silver that he bought, but charging a vaulting fee. And when the complete light was shed on this problem, the truth was not only had Morgan Stanley not bought any physical silver whatsoever at all, but they didn't even have a vault to store it. And so what took place was a fine. Now, if we're up to me as the judge, I would say Morgan Stanley is null and void. It cannot ever trade silver futures or be involved in the precious metals for 10 years or 5 years or whatever. But no, is paid a fine. But I've saved the best for last, because during the iteration of discovery, going back and forth with the fancy schmancy lawyers, Morgan Stanley said that not having the silver and paying for storage was pretty much standard in the industry. Now think about that. How many people are out there of significant means that have bought, let's say, $50,000, $150,000, $250,000, $1 million, $2 million, $4 million worth of silver? They bought it from a mainstream financial house, one of these big banks or brokerage services. And they get a statement every month, and it shows how many ounces they have. And yet in reality, it doesn't exist. Or it's been hypothecated or rehypothecated somewhere else. It's used by the bank to back up a silver swap or whatever. So that's my take. I think if we really were able to uncover more of the problems that I just outlined, that a lot of people that have significant holdings would like to move it. I mean, one of the big moves that started to, I think, move the market somewhat was when John Adams and I did an interview about allocated versus unallocated. And we were urging everyone to move out of unallocated into allocated. And coincidence or not, I don't know. But commensurate with that, the silver price started to move up. And then people just kind of backed off the idea because, it's too hard to call up and move my silver from location X to location Z. I don't want to do it. Besides, it's so-and-so's name on my, account statement. Yeah, I'm not going to trust them. And you can, if you wish. And I'm not saying they're all bad. They're not. I'm giving you a specific example. UBS did something similar. But the people that need it, that's what it comes down to. So I think number one, that's the first problem. Number two is the actual need for industrial purposes. If that starts to tighten up for whatever reason, then the reason would be, again, more paper than there is physical, then that could cause a wave. Because what would happen, or potentially happen, is that XYZ technology company goes through, I don't know, 2 million ounces of silver every month or whatever it is. And they find out that it's very hard to get. So they start to subtly go buy more. Maybe they double the amount, or maybe they triple the amount, and then that makes it even tighter. So, and then once that run to silver begins on the industrial side, then it could spill over into the monetary side, or vice versa. Once all those people listening to this program say, David's right, and I've got 50,000 in the bank, and I think I'm going to take, 10% of it. No, I'm going to take 20% of it. I'm going to take 10,000 of it. I'm going to buy silver. Well, it doesn't take too many of those to do it. Of course, you want to do it where you own it. Now, I'm not against storage because I store a fair amount of mine, but I do not store within the system, meaning I don't store at a well-known bank. I store at a private facility. And I'll be writing about that in the premium service. You already know what I'm talking about, but I can't say it publicly. I don't want to cause a disruption in the market. But so there's a lot that I unwound there, Jake, but I think we focus too much on believing the reality that, everything's on the up and up. When if you really open up the covers and you drill down and see what's really been going on in the precious metals, especially on the silver side, what you uncover is pretty ugly. And that's part of it. I think the light has to shine on that part of it. And when it does, I think you're going to see people. Now, the last part is investment demand from let's say, the brokerage houses or the institutions. When the institutional investors come into the silver market, they're not going to buy physical. They're going to buy the SLV primarily. And that could certainly drive the market. The problem there, in my opinion, is we really don't have a super good accounting method. Now, if you read the prospectus, is there physical silver backing the SLV? The answer is absolutely. Is it 1-to-1? I doubt it. Why? Because I've read the prospectus. And they're allowed to take the warrant from a contract that they own, to be in the off the exchange, and count that as physical. Well, it's a representation of physical. It's like having an ounce of gold and having a 1 ounce currency note that's representative of the ounce of gold. One's exchangeable for the other, but it only represents 1 ounce. But you could show that 1 ounce currency to a person and give the gold coin to somebody and borrow against it. So really you've double counted it. And that's illegal, absolute in the SLV and other ETFs in the silver world. Now, is it pervasive? How much of it takes place? Does any take place? You make up your own mind, because I don't know, but I know it exists. Whether it exists at a small fraction or it's a very big part of the market, I don't know. But there is going to be, I think, a squeeze. And I'm writing this month's report, as you know, Jake, and in fact, I'll get right back to it after our interview. But something looks drastically wrong in the banking system, bullion banking system for silver right now. One of the things is Deutsche Bank has been offloading a significant amount, like 33-40% of their silver holdings recently. And my conjecture, my conspiracy is that they're doing that because, one, they're insolvent, but whoever is pulling the lever on the other side isn't wanting foreign exchange. They're not looking for euros. They're looking for metal. So that's being taken off of their exchange and placed wherever it's needed or wanted the most. Again, there could be a run to silver that people don't really understand due to either the monetary side and or the industrial side. And one will feed the other. I think it'll be monetary at first, and then I think it'll spill over. But if there is a, let's say, uncovering of what I outlined earlier about how much physical's actually been bought versus how much physical actually exists, and that gets into the consciousness of that group of investors that are buying in the, let's call it $500,000 level or higher. It wouldn't take too many of them to say, hey, wait a minute, my account's at blah, 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 brokerage, and I want blah, blah, blah brokerage to send that silver right now to, and I'll give them the location, and well, then we'll recount it and we'll see what's up, because right now it doesn't add up.
Well, there seems to be a house of cards everywhere, from the war on money, fiat currency printing, inflation, supply chains, the house of cards in the silver market. It's fun to decipher it with you. We thank you for joining us, David Morgan. For everyone listening, be sure to check out the Morgan Report website, which we will link right there down below for you to check out as well. I want to thank you for watching. If you enjoyed today's episode, let us know what you think in the comments right there down below. Hit the like button, subscribe, bell notification to get notified for future episodes. David, I want to thank you so much for helping us pull back the layer on the overall house of cards. And it's always a pleasure to speak to you. And I want to encourage everyone to check out the morganreport.com. David, anything I missed?
No, not at all, Jake. Thanks. So it was fun to be with you. And hope I don't sound too gloomy. I mean, it's important to have balance in life. So you want to balance your phony money that we all use and we all have confidence in with something of substance, if you can afford to do so. And, a lot of what you teach, Jake, I think is, as important, if not more so, than money itself. Money's important, but an overall balance in life is the most important. And love, there's just not enough in these trying times. As we spoke off the, view now about my, being a grandfather here in about another month. And, it just brings a lot of joy to my heart, just having family and, having a new member coming up soon. And there's a lot more to life than just, the monetary problem, although that's basically how I make a living and focus on. But get to the morganreport.com, get on our free email list. I have been shadow banned for years. I mean, it's pretty easy to determine an interview like this to get 2,500 views, but on Stansberry Research, 1.7 million. I mean, that's a pretty good indicator that YouTube doesn't like what I have to say, and Twitter also. Nonetheless, I am on Twitter, I am on YouTube, I am on LinkedIn. And of course, the main website's the place to get on our mailing list in case I'm taking off of any of these main platforms. I'll be on the backups, which I already am. I'm on Odyssey and a couple of the others. So